Hey guys, welcome back to my channel, and this is the breakdown for today, October the 7th. And guys, today as we take a look at the higher time frame, guys, my overall bias was mixed today because I saw nothing on the daily chart that would tell me otherwise than we keep making higher highs. That's the only thing that would lead me to bullish price action today. But we already traded in this daily FEG, this internal liquidity, and we already took the external liquidity. And this red candle is today trading. This was yesterday's trading. So on the daily, nothing otherwise than price is bullish in terms of highs and lows. So I went to the 4 hour. On the 4 hour, price was kind of moving sideways at about here, about in this candle here. When I did the analysis, we already traded to this 4 hour fair value gap, and we had already traded to the highs. So there was nothing telling me bullish or bearish on the 4 hour, or otherwise again than we were making higher lows and higher highs. What I saw on the 1 hour gave me like a perspective on if price do this, then this. If price do that, then that. We had this fair value gap with price had already inverted because around that area we were above. So I was looking at price. If price stayed above here, then I would look for longs. If price traded below here, then I will look for short. But guys, the bias is only my model. I don't really need a bias to trade. Is the bias I normally look for a bias to see where price is going, if I can hold my trade longer, or if I should look for more than a 2 risk to reward ratio. But otherwise than that, I don't really need a bias. I just want to know where price is heading in terms of if I can hold my trade longer. So that this inverted fair value gap that I marked out, if we are bullish, then price should not have traded below this fair value gap. And as you can see on the 10 o'clock, yes, 10 o'clock, we closed below this fair value gap right here, this inverted fair value gap. After we had inverted it, we end up trading back below, traded up to it, and then traded lower. So on the regular trading hours at 9:30 when we open with a gap above. So we had a gap below the open price at 9:30 this morning. So that was one confluence for lower prices. Okay guys, so we had our first confluence for lower prices, at least before trading higher, was the gap, the open gap at 9:30. When price opened, we had a gap higher, so we had a gap below. Price gapped up, so that we had a price gap below. So guys, when we come into the chart in the pre-market, what do? As usual, we mark out our lows and our highs between 7 a.m. and 8:30 a.m. So this is our NQ chart. This is our micro NQ chart, and this here is 7 a.m. This is 8:30. This is the lowest low. This is the highest high. We mark that out. And next we mark out our open, both open, our 8:30 open and our 12 o'clock midnight open. We do this for our both pairs and on the micro and the mini chart also. So this is ES, this is 8 o'clock, this is 7 o'clock, sorry, this is 8:30. This is the lowest low between that time, and this is the highest high between that time. As you can see, we are relative equal lows here, which is a high probability draw on price. So that is the next confluence. Next confluence is that, let's deal with the NQ chart. Next confluence, because that's the chart I took my trades on. Next confluence at open, we right here, this is 9:30 open. Where is 8:30? 8:30 is right here. 12 o'clock midnight is here. We are above these both open at 9:30, so that put us in a deep premium. Price is relatively expensive. If we need to go bullish, we would need to trade below to discount, then move up to the highs. So that's our next confluence, that we are in a deep premium. Price needed to trade lower before trading higher. So next confluence is that the lows between 7 a.m. and 8:30 a.m. were still intact. We didn't run these lows. Most of the time, not every time, but most of the time, these highs get run before price move in its direction. If it's not run on ES, it's run on NQ, and the lows, both lows on NQ and ES were intact. The highs were taken in the pre-market, as you can see here. So guys, I have the live recording, which I will place at the end of this video. So if you want to watch the live execution of my trades, you can wait to the ending and you can see the live execution. It will be faster than the normal speed. Okay, so guys, this is the open price. We trade down. What we were looking for lower prices. We traded down here. When I saw that price traded down, and we were above, we were below here, this other block right here, we traded low. We had 1 2 3 bearish candle, so, and we are looking for this low, and eventually the 12 o'clock open. I took, when price closed here, I took one contract, knowing that price just opened. I didn't want to go full, my full 2 contract or my maximum 150 per trade. So price traded and closed below this here. I took one contract, price reverse, took me out. Traded up, took out these highs, put it a little bit bigger so you guys can see. Okay, took me out, traded higher, then started trading lower again, closed back below here again. I took a next one contract, immediately price reversed, took me out again. So after price took me out, I wanted to wait a while to see what price was going to do, knowing that I wanted lower prices. I was looking for signatures in price to show me that price wanted to move lower. This I could have avoided. I could have waited for at least the first 10 minutes, because that is a part of my rule, within the first 10 minutes before taking my first trade. Because the first 10 minutes is most likely it's manipulation. Yes, I can catch a good manipulation trade, but the best trades mostly come after 9:40 area, the first 10 minutes of trade. I normally sit that out, but lately price is chopping a lot lately, and you normally get the best trade at 9:30, so that's why I took these first 2 trades. Okay, so price traded up. We made this first presented fair value gap. And next thing that I should have waited for, I should have when I saw that price this place up, usually price would have come back into this one of these fair value gap before trading lower. Because if price would have dumped here and then open dump here, too many people would be making money, so price would have pulled back first. So price created the first presented fair value gap here, and as you can see, we found support here with the first presented fair value gap. We made SMT here, and we displaced above this highs. When I saw that price displaced above this highs, the next thing again, that's FOMO, thinking that price was going to run away, and I wasn't in it. It's okay. Have to keep telling myself it's okay to miss a trade. It's okay that I don't catch every trade. So seeing that SMT price made this fair value gap displacing above these highs, I took one contract again. Not confident in this trade because it's against my bias, but I was at least looking for these highs before I went. I would have gone break even at above these highs. So took the one contract in this fair value gap, price pushed down, then push up a bit, and then took me out. At this moment there was SMT at the highs, SMT at the lows. Normally when we have SMT at the highs, SMT at the lows, the SMT that get run out, that is the direction price is going to go. So the lows, these SMT get run out, and you see price ran these SMT, this SMT held. So our next confluence that price was going to tip it hand lower is that we had this intermediate high form here. Intermediate high is a high with two short-term highs on each of the side. So we have a short-term high here and a short-term high here, break below here with a fair value gap entry. So guys, when I saw that price ran out these lows here, invalidating this SMT, I took a contract here. Actually, I took it before price ran out these lows. Guys, so that price close here, close below here, this first presented fair value gap. I saw that price was trying to close underneath here. Shit, 1 minute. I saw that price try numerous times to close underneath here, and it was rejected, and then it finally closed below here. That's when I took my free contracts, 1 to 3, knowing that I was bearish in the first place. So I was looking for lower prices. When I saw that price inverted this bearish first presented fair value gap, I took free contract. Was a bit more confident in the shorts, so I took free contracts to the downside. So price started reversing on me. It went a bit in profit, then reversed on me. My stops was above here, then started going in my favor. I placed my stop at break even, and I'll show you directly. I'll show you why that I placed my stop at break even. Was because the lows, the marked out lows between 7 a.m. and 8:30 a.m. was being ran by ES. So as price ran these lows right here, as you can see, price is right here and it is right here on ES. As price ran these lows, I placed my stop at break even here. Price came back up, took me out. But guys, I didn't see this pattern form as yet. If I saw that this pattern had formed and I saw the break below here with this FVG here, I would have entered again when price took me out at break even here. I have the recording. I will show you guys if you want to see the recording of my live trading. It will be at the end of the video. I would have taken a next short right here because the lows was still intact on ES. Even if it was ran on ES, it wasn't ran on NQ. So I should have taken the next entry there, but I didn't see this pattern here and the break here with displacement. So guys, so I watched all this trading here, didn't get involved. We had this nice displacement here down. That would have been a beautiful trade because price just melted down lower. So after we had this beautiful displacement on the 5-minute time frame, we had this breaker, and I labeled the breaker with these associated breakaway gaps because we had the two fair value gaps stacked on top each other. we had the breaker here. We had high, low, higher high, price breaking below here with displacement with two stack up FVGs. So normally on a good day, price would not trade to this breakaway gap, or if it trade to it, would not trade to the upper portion of it. So guys, after price made this low, right here, we were trading up. I was looking for price to trade to discount of this range before I enter a next shot. So price was trading up here, trading up. I was looking for price to come around that area and look for shorts, but I remember that this was a breakaway gap. Price wouldn't normally trade to it. So when I remember that, I saw that price made a small SMT, and guys, as I told you guys, it's all in the recording. You can see it, you can watch it at the end of the video. I saw that price made a small SMT displaced below this high while we were in this first fair value gap, knowing that price normally doesn't trade to the higher one. So I was looking for a short when I saw that price trade below these lows. I was looking for price to come back into this fair value gap, take a short at least down to the lows. This would have been the short, or this was the short I was looking for, I should say, down to the lows. Another, I would have gotten my 1 to 2 risk to reward easily. So I missed the trade, so that price kept on displacing lower, and I was looking at price, but all this time I was looking for a reversal, knowing that price traded lower all morning. I was looking for a retracement. So when price made this leg lower, made this FVG right here, so that price traded up. We had down movement in this FVG, we had up movement, we had down movement, then we move up again. This was balance. This was a balance FVG right here. So as price closed above, traded back down lower, I took 2 contracts. I was looking for this relative equal highs and then these highs, which was about discount of the range. Price traded in my favor. Price traded in my favor a bit. I think my balance was, I was minus $120 something. I was way above that. I think I price traded to at least give me at least $150 with about $30 in profit. Then I placed my stop at break even when I saw that this leg price closed above this inverted, not inverted, but price inverted this fair value gap. I placed my stop at break even around that area. Price came back, took me out at break even. Then I saw that price made this intermediate low right here with these 2 short-term lows on the side of it. When I saw that price made this pattern here, displaced above this high here with a small FVG, I took my 2 contract here again. 2 contract as price closed above this FVG. I took 1 here, and then when price came down to the small FVG, I took a next. I had 2 contracts. Low, the stops was below this low, and price traded in my favor. I was almost $200 in profit. I had already recouped the loss. I didn't take any partial because I was looking for these highs. My first partial would have been above these highs, or at least where I could have recouped my loss with a partial. It didn't happen. Price reached up that area. When I look at the 5-minute time frame, I saw that we had left a FVG at the back. We had left a FVG here, so most likely price was going to retest this FVG before continue up and going up. That was my mindset. So I actually placed my stop at break even. No, I placed my stop under this fair value gap right here. As I say, guys, you can confirm that with the recording. I have the live recording at the end of this video. So guys, I placed my stop here, price came back down, took me out for about $50 profit, or 40 something, 50 or 40 something, cannot remember too well, and it recouped some of the losses. So now I have $70.66 negative on the day. I lost, that's my total loss for the day was $70.66. So guys, that's the trade breakdown for today. As you can see, the model works. It's just being disciplined and following my trading plan, following my rules, and trading my rules and trading my plan. That's all I need to do, and I know that I will be profitable. This model really works. I just have to keep at it. Okay guys, if you find any value in this video, if you find this video was insightful, if you find this video was educational, please drop a like, comment, share, subscribe to the channel. Peace out.